up next, we are going to introduce our last fireside chat of the day, and it's my pleasure to bring up Eduardo Tobon. He is a Latino segment head for BMO, but more importantly than that, he is a founding member of Angeles, and he has been here from day one. So welcome, Eduardo.
First of all, great to have you all here. And at BMO, and as you heard from some of the other folks here in banking, we care deeply into how to grow, our economy and how to grow companies that are doing fantastic jobs in our economy. And I have the pleasure here today of having Navish Shava, who is the Chief Investment Officer at Hernandez Construction. And for those of you who are seeing the skyline here, Miami, many of these places, Hernandez Construction has had something to do with them, as you're going to hear from him. But importantly, Hernandez Construction is one of the largest Latino-owned companies in the country. Alex Hernandez, we're going to hear more from Navish about him. Thank you. Thank you. Hernandez Construction is one of the top Latino-owned companies in the country, based out of here in Miami, but doing business, in several markets in the United States. And at BMO, one of the things that we've done in partnership with Latino Leaders Magazine is precisely to highlight where these companies are located, who are the owners of these companies, the leaders, the founders. And they range from 13 billion in revenues to 35 million in revenues in some cases. Many of the investments and startups that you're hearing today, and you'll continue to hear over the next few years, some of them will actually make the list, and many are aspiring to surpass that list, and is good competition and healthy. But let me introduce you to Navish and tell you a little bit about him. He has been with Hernandez Construction now for some time. He is the Chief Investment Officer, bringing an exceptional track record in real estate development. We talked this morning about the importance of asset classes, and obviously we're investing in the angel investing and venture capital type of asset class, but he's in the real estate asset class. And as a Chief Investment Officer, we hope to learn a lot from him today. He's involved in acquisitions, entitlement, portfolio asset management, valuations, and capital raising. He has been involved in more than enough transactions for you guys to be impressed. Over $10 billion in real estate transactions, over $1.1 billion in debt and equity across various asset classes and geographies, a lot of high-profile acquisitions, investment pipelines, and many things that are global in nature. He moved to Miami 2.5 years ago from New York, has a wife and 2 daughters that are with him, and it is my pleasure to have him here today.
Thank you. Thank you. Thank you. Out of curiosity, anyone in this room actually heard of, Hernandez Construction or Development, or is this the first time? So what's interesting about Alex, he's a first generation, Cuban, from Cuban parents, and started his career about 25 years ago, and slowly, meticulously grew his company to become the largest industrial contractor developer in South Florida. So everything in Broward, Palm, and Dade, Alex has been some form a part of on the industrial side. In fact, he's building about 3 million square feet in Doral on behalf of a major private equity firm out of New York. And what's interesting about our business and kind of my involvement is that Alex actually started that many of his investors were friends and family from the Latin community. So they were the foundation and the bedrock for him as he launched his career, and they've been with us now for 20 plus years, which speaks volume to how strong the community is and how important the community is to Alex and his growth and kind of where we are today. As a company, we are really focused on 3 different areas of the business. We do about a few $100 million in construction. As a developer, we're building self-storage, industrial, and we are launching a multifamily and BTR platform. given kind of the expertise of myself and others in the firm. And so as a company, we're evolving and growing where many other companies tend to be shrinking. And in this marketplace where credit is tight, the reason that we are continuing to see success is that we never relied necessarily on institutional capital. We relied on people like you in this room who funded our business and continue to fund our business. And whether it's a good time or a bad time, we only focus on the best assets. We have no pressure to go and do 20 deals because we are such a large organization. In fact, there'd be times we'll do 2 or 3 deals. There'll be times we'll do 5 deals. There'll be times we sit on the sidelines and we wait. Because we're investing majority of our own capital along with our friends and family, that has been the discipline and our success. And so this is an important kind of group for us because it's representative of the people that have got, were the foundation for our platform.
And perhaps, if we can double click on that a little bit, Navish, because it's important, there's a lot of people that we come here to Miami, we hear about Inter Miami and Lionel Messi and everything that's happening here, which is so much fun. And, the Cuban-American community here has been super tight and super successful, from the Mas family that owns Mastec, a publicly traded company, super large, to you guys, and they help each other, right? So maybe you as a chief investment officer bringing in, that additional expertise as the company's now going into the next, flight. We see a lot of companies, they get to 100 million in revenues, they now want to get into the $1 billion revenue mark, and then not necessarily the same founder can take the company, from 0 to 100 million, and then not necessarily the same founder can take it from 100 million to $1 billion and then plus. What's your take as chief investment officer as you guys are going into that trajectory, and maybe talk a little bit about that?
It's interesting because we talk about growth all the time, right? Because you're building a business, and as you focus on your strategy, you always focus on where I'm going to find opportunity next. Like everybody else in this room, everyone's trying to figure out, where the opportunity is in Miami. And quite frankly, when you look at Miami and a New Yorker coming down here, about 10 or 15 years ago, I used to own an office building here, right? Where the old Mandarin Oriental is on Key Biscayne. And Miami today is nothing like what Miami was, 10 years ago, but take 5 years ago. You have really intelligent people here. You have great opportunities. You have companies that are coming down here. We're seeing the growth, but the growth is coming in the form of highly skilled labor. Look at the type of people that are moving here. Look at the type of education system that you have here that's growing. You have strong universities. You have a lot of students that are coming in, which is a big part of the growth in Miami, from places all around the world. And that has been kind of the demand driver, because I think businesses like us, it's hard to find great talent. And so when we look at growth in our business, it's actually a function of a couple of things. It's not only getting access to capital, right, which is part in real estate. It's a very capital intensive business. But the other thing is talent pool. And I think that has changed dramatically. And you're seeing it with some of the major developers in Miami from all walks of life, from all four, countries around the world. And I think that is representative of where Miami is going. And so when you look at it today, I think I'm more bullish if you talked about the top 10 markets in the country to be in, and Miami's probably top 5. But when I say Miami, what I'm trying to say, it's South Florida. So that's, Fort Lauderdale, that's, Palm Beach, that's, as west as well. I mean, you're seeing so much growth in Naples, and other markets like Tampa. So these are places that we continue to invest, and we continue to invest in Florida because we believe in Florida as a long-term market.
Yeah, one of the areas perhaps for educational purposes for all of us, some may be invested in real estate in some forms and some may not, but perhaps you can touch base on a little bit of what areas within real estate are more challenging right now, given the current rate environment. Maybe you talk a little bit about rates, where you see them going, in the next, 2 to 3 years, give the people perspective on that front.
It's interesting because like, if I could tell you where rates were going, I'd be a billionaire. But, I think what the challenge is, before I joined Alex and kind of helping him in this platform, I ran one of the most successful multifamily development companies. It was a small business that I started and turned it into a top 20 national developer in 4 years. But when you look at an opportunity, I had everything in my favor. You had rising markets with valuations, you had low interest rates, you had appetite of capital, you're coming out of COVID, so there was a need and demand for housing. I think it's challenging to say, how the next 12 to 18 months are going to look. I think there is going to be, the credit markets are still tight. I think anyone that tells you that they're seeing growth is not necessarily being all that transparent, because I think there are pockets that you're seeing growth in. I think rates will come down, not as drastic. I think if you talk to my peers in the development business, everyone is hoping that mid 2025 would be the launch pad where you'd start seeing a turn. You'll see more development activity, you'd see robust rent growth, you'd see more capital coming in. I think now that premise is being shifted another 12 months. And I think till some of the, the tariff issues, inflation issues, I think you're going to see some, upticks in unemployment, because there is going to be some redundancy, and with what's happening in our federal government, cutting, employment, as well as other companies that are just trimming, employee fat. I think the next 12 months are going to be a little bit challenging, but the companies that are going to be, well or perform are going to be the ones that have a key strategy. I mean, we are right now, just to give you an example of where we're putting our money, is we are acquiring sites and entitling land that takes 12 months or 18 months, but we're not building today, meaning we're going to build towards the end of the year, early next year, because we are going to see a turn in the market, and we want to be ready with product that we believe is going to outperform, not only based on demographics in the market, but just continual need and growth in the marketplace.
Well, today and yesterday a little bit too, we've been talking about generative AI. You've seen some of the companies talking about generative AI. As a chief investment officer, I'm sure you're looking at technology all the time and how they can help you make better informed decisions. And as a company that, even though it's in a very specific vertical and commercial real estate and real estate in general, what are the kinds of things that from a technology perspective you're looking into?
It's interesting. I always worry that there's going to be some AI that replaces me. That's the first person to go, right? Or figure out how to cut my salary in half. I mean, if I'm Alex, that's the first way I'm trying to manage overhead. But realistically, I think what we're seeing and where we are using AI, quite frankly, was we are investing in a few different verticals. One, we're using AI for cost estimating, right? Because think about it. One of the challenges in our business is you get construction drawings and plans, and not only do you have to go page by page, you got to be able to look at materials, what that costs, look at the specs. So AI is really great for that. And instead of having, a team of estimators, we now have an AI tool that allows us to, and which we were working on, that allows us to get pricing, but not only what the pricing is, but it's, gives us the ability to go out to the market, to our vendors, and get real-time quotes. So I think that's one element of AI that we're using on the construction side. The other thing, back in the day, and I know, I moisturize, so I look young, but I promise I'm old. I'm older than you think. But when I first started, but in this business 24 years ago, my boss had given me a map and told me, go see this property. No one has seen it at the company. We'd like you to go see it. I think we own it still. It was for a large company. And he goes, figure out, if it's something that we want to maintain, look at the demographics. And back then you didn't have all the tools that you have now at your fingertips, right? You can just keyword some demographics, household income. You could see, what kind of development is happening in and around a location. And that is something that is so powerful, and that's where you're going to see the shift. You're not going to see software companies exist anymore. It's all going to be in a form of AI, because all that data is already available. So right now, if you think about it, there are data providers that you pay for to know, how much, development is happening, what's the rents, what is the household income or demographics, or a unit mix or whatever it may be. And all of that now is going to be housed somewhere on the web, and AI is going to be the tool that you're going to be able to access it. So I think there's going to be a shift in the technology space away from software-driven companies to more, AI tools that will be able to access that data.
I'm glad you brought up that and the fact of the demographics. What perhaps will be helpful to this group, and we appreciate non-Latinos being able to help us think through the opportunities and the challenges that we have in front of us as we invest and try to grow our own portfolios, and as we have founders start their own companies. Uh, Perhaps if you can tell us, and maybe as a setup and context, we have 500 plus members, growing by the day. 507 as of last night, might be 510 by this, afternoon, and who knows? But there's 1 million, high net worth accredited investors, I should say accredited investors, that we happen to know that are likely to be Latino, sort of um, um, either um, they're self-indicated as Latino or Hispanic in the US, but there's other areas, the Indian community, for example, has been, we were talking about this morning, very entrepreneurial as a result. And there's a lot of similarities in terms of, any immigrant community that's coming into a country like US, melting pots, trying to invest where the numbers are going to look good. So the demographics for the Latino community are showing a lot of strength for the foreseeable future. How do we get more of those accredited investors, of those high net worth individuals to connect? Because that's part of what we're trying to do. They don't need to be Latino to be part of Angeles. They just, need to kind of do what we try to do, which is try to invest in companies that are growing super fast. In our case, we find that many of these companies that, we're investing in, they happen to be Latino led in many cases, but not in all cases. So what can you share with this group?
You know what? One of the things, as I met some of you yesterday, and I was impressed by the things that you guys are all involved in. I think one of the things you guys should do more about is talk about your wins, because there are a lot of them. And I think at times we tend to be a little bit bashful or not share successes with maybe a capital raise, whether it's a few $100,000 or several million dollars. It may be a launch of a business. It may be revenue growth and then, in the form of an operation. I think those stories are important, because I think the strength in any demographics is community. I mean, you look at New York as a unique space. Jewish community is very strong there, and they have a very sense of community, and they invest in one another. And I think that's in my perception, that's been the strongest, dynamic of that community. And I think this organization is proving, look at the strength in numbers. And I think as you guys continue to grow and invest in one another, I think you'll see an exponential growth. And if you think about it, in South Florida specifically, the Latino population is a massive, massive, force, right? Whether it's not only on spending, it's labor, it's education. I mean, they touch every aspect of the business. So if there was more a focus on creating this community and growing it, the opportunity is what you've seen in New York with, kind of the Jewish population, where they've strong and strengthened numbers and invest with one another. And I think that is the secret to really growing and having success, is like, these are your peers, these are your investors, these are the people that are going to support you.
What a beautiful example in New York, and I could not agree more. We heard about this study that was actually done, where you see the amounts of cycles that money goes through an existing community, and the Jewish community is the standard. They actually cycle their money 10 times compared to one time for our own community. And there's many other communities that could benefit from that. So we as a group, as we try to get others to invest, whether it's in startups like we're doing, and, high growth startups in our case, or whether it's in real estate, or whether it's in any other asset class, the ability to have that money continue to flow, because not every aspect of your portfolio is going to go into only startups, right? A portion of it, depending on your risk tolerance, may go into it, but another portion may go into some of the other asset classes. So like that aspect of it. Was there anything other, before we go into opening the floor for additional questions from others here, that you wanted to emphasize, given the audience and given the trajectory that you guys have had and what you're seeing, happening in the next 12 to 24 months?
The only thing I'd kind of, share with you guys, I think one of the biggest things I think it's important to recognize, specifically in real estate, but in any business, is you got to have the patience to hold tight. Whether you're making an investment in real estate, whether you're making an investment in a venture or a startup, time is your biggest, my biggest, flaw, or what I should say was a learning lessons, is I wish I never sold anything. Right. And I say that because you can replicate what you create, and everything is limited, right? Resources wise. And I think if you have a long-term vision to create real wealth, you want to figure out a way to hold on to your assets, whether it's real estate, whether it's stock, what investments in companies. I think, we need to be a little bit more, have a longer view. It's easy to monetize something when you have a success and use that, but the real success is really in holding long-term and being patient with that.
Well, the compounded growth is the eighth marvel of the world, and it requires time, right? It's a little
right.
snowball that starts, and if you have an enough slope, which is time, it's going to create a very, very big, outcome at the end. So I think that's a really, really smart, words of wisdom for this audience. I like to make sure we have enough time for questions from the audience. Orlando, please.
Construction is a very labor intensive business, and Latinos are 31% of the construction industry. I'm curious what you think about immigration issues and how they might impact.
Yeah, I mean, we're seeing some impact with other developer contractors, not necessarily us, because we tend to use subcontractors that have verified labor. That's what it's just been our thesis from the start, because we represent a lot of large private equity capital, and their thesis is they never want to be in a position where they have stoppages on the job site, because that was a real issue and it continues to be a real issue. There was a friend of mine who was a large developer, and they have a large construction business in Central Florida, and he has said to me that at least in the multifamily space in which they are in, that they've seen a third of their employees not show up to work, or stay at home, and it's an issue, because those folks are hardworking, tax-paying individuals. And I do think there's going to be some change in the immigration law. I think a lot of this is, quite frankly, just noise, and it's part of the program when you signed up for. But I think ultimately I do see that part of the issue in labor. I mean, the real issue right now is tariffs. We build self-storage facilities. We just got a letter literally an hour ago from one of our vendors that said, hey, the steel cages that we supply you is going to go up 20%. And oh, by the way, if you don't pay the full freight today for something I don't need for another 12 months, there's going to be a 25% increase. So that's a real issue, right? And so we're dealing with it, just like every other developer in the business, but it's not great. It's not great.
Thank you for everything that you mentioned. I thought it was very insightful. I just bought my first house in 2023, and I thought one thing that you mentioned that was interesting was like buying land, and that you're not just going to build yet on it. And as I'm thinking about diversifying my own investment portfolio, I was thinking of potentially buying land, and then obviously when you buy land, at least for me, I was thinking, oh, build something quick. Like, how do you know when's the right time? How do you know that land is the right move? Yeah.
It's interesting. So like I'd mentioned, I had my prior company called Advantis. We did about 5,000 units of multifamily development throughout Southeast United States. So we bought, we took a big bet when I was, I'd left my job, I had 2 young kids, and I told my wife, hey, I have this great idea. I'm going to start a company and we're going to go buy land. And she thought I was crazy. And it's hard to, and by the way, we're going to move to Florida from New York. And so, but it was a bet that paid off because we were able to acquire land that saw significant price appreciation. And quite frankly, a lot of the folks that I've met that are very, very affluent, specifically in Florida, are those that families that have had land that have held for many, many years and now are monetizing it. I will tell you, construction costs are going to increase, so you got to be mindful of whatever you buy. One of the things that we are launching later this year is that we've partnered with a factory out of Orlando, and we will be building modular townhomes out of steel. So we will be able to deliver a 2,000 square foot Class A townhome, 10-foot ceilings, 2 stories, storefront glass for $200,000, which would be a fraction of what it costs to build in wood and concrete today. Because we're believing that the market opportunity, regardless in an up market or down market, is going to be some form of workforce housing that allows, rent is so expensive here, right? I come from New York and I thought, oh, I'm going to come to Miami. I'm going to have this amazing place. It's going to be a fraction of what I'm going to, pay in New York. I come down here and I'm disappointed. Why? Because I'm paying the same rent. Yeah, I got a nice view, but it's nowhere close to what I thought from the movies, right? And I think that it was a hard sell to my wife, let me tell you, when she was like, this is not what I signed up for. But I think what I would tell you is that as we continue to grow and our focus now is more on finding housing needs, given what we're seeing in the affordability space across the United States, but specifically in Florida, we think there's going to be an immense opportunity. And if you can buy land, specifically multi or self-storage or industrial, and have ability to hold, I think long-term, you're going to do a multiple on your investment.
One more last question, if anybody has one. Well, thank you, Navish. Really appreciate you coming. Thanks for all those.
Thank you so very much for that. Now we are gonna, we're back on track. We're back on time. So we're gonna take a 20-minute break and we'll be back at 4 o'clock for our pitch night. So I know everybody's really excited about that. We'll see you in 20 minutes.